On another episode of Soothing Semantics. I'm your host, Rafi Pinsky. Make sure to subscribe, like, share, smash the like button. And here we go today. Before we start, for any of your real estate needs, buying, renting, selling, investing, make sure to give me a ring. You can find my email as well. And check me out on Instagram at Rafi the Realtor. Very easy to get in contact with me. Without further ado, today we have Barukh Rohde. Okay, that's Baruch with a ch, okay? And Mr. Baruch is quite an interesting fellow. He has quite a lot of real estate, so we're going to get into that. You've done a lot of trekking. You've walked around a lot. You walked, 15 miles to his house, he said one time.
My personal record is, a little under 70 in a day. I once did a 3.5-day walk. That was 140 miles of walking out of 230 from Newark, New Jersey to Washington, D.C. That was the capstone of my walking era. I also did a lot of biking when I was a kid, too. I've had a lot of fun. I've lived. With
Nice.
Every broken bone, I swear I lived.
Nice. I like the reference. That's always a good song. So, among the walking, you have, when I look on your Facebook, you have quite a list of accolades and accomplishments. Research scientist at U.S. Department of Agriculture, USDA, mortgage consultant at Exim Mortgage, former postdoctoral research fellow at University of New Hampshire, former visiting researcher at USDA, former teaching excellence fellow at University of Florida. There's like a whole list. Former NSF graduate research fellow, former honorary visiting scholar at James Cook University.
Yep.
Australia. Several others. Studied electrical and computer engineering. Former research assistant at University of Florida. There's quite a lot here. So, obviously, thank you for making it happen, dude. You crazy motherfucker. So, shout out to you. Obviously, he's behind the camera. He's the one directing it. I'm not sure why he isn't wearing a shirt. It's a little weird, but...
That's obviously for you.
Yeah, that's what he does.
He and I met because we went to a Jewish summer camp for... characters, delinquents, something like that. We were
people on the spectrum, but not actually on the spectrum.
I'm definitely on the spectrum.
That's fair.
And there are two different spectrums. There's the autism spectrum and the
Right.
ADHD spectrum. I'm on one, he's on the other.
Okay. Well, we don't have, it doesn't matter which is which. We can just, So you acquire, how many doors do you have at this point in time?
I have two different numbers to answer that question. One is the total ownership. One is the landlordship. I am landlord to 65. I say I own 38. That's because of my 65, a bunch of them. So I've got 42 units in Texas that are 40% mine, 60% my business partners. And then I have 23 units my own. And so I add all that up, you get 38 by percentages.
Okay, so 38 doors.
Yeah.
No.
Landlord to 65, own 38.
That's still a lot of doors. It's a hell of a lot of doors. Okay. So how did you go about acquiring the first ones?
I bought my first one on 0% interest credit cards. So those offers you get in the mail. They will tell you, you can pay no interest for a year or 15 months or 18 months, depending on the card. I bought my first house on those. It was a duplex that had a fire in it. It was through Fannie Mae Home Path, which is a program for first-time home buyers to buy foreclosures. Nowadays, there aren't quite as many foreclosures. There will be in a couple years, particularly in 4 years from now. But at the time, I bought I bought a duplex that had a fire in it, and I was the only one willing to live in a house that had a fire in it.
That's wild.
And I worked on one side, rented out the other, and then finished the side I was living in too. I lived in it. Rented out the car apartment where I was living at the time. That was my first house.
That's wild. Okay, so you really, you were willing to live very simply to be able to get things moving.
I frequently tell the people who ask me for advice in real estate that the best way to put yourself forward financially is to decrease your standard of living. That's the no shortcuts way.
Right. Yeah. No, that's super important because most people aren't going to do it.
Correct. Most
Okay.
people won't. I mean, we were just talking about before we turned the camera on about how I'm currently living in Little Haiti. I live in a house that is awaiting a zoning hearing, but it was hasn't been inhabited really for. Hasn't been inhabited, not just really, hasn't been inhabited legally for 10 years.
Yeah, that's a very nobody's lived in it. Was it like boarded up, or it was indeed?
No, it is still boarded up. It is still actively boarded up. Thank you very much.
Wait, you're living in it and it's boarded up.
Yeah, it's got boards on most of the windows and some of the broken. Yeah, that's great. I can't fix it yet because I'm waiting for my zoning hearing and therefore for my permit to get approved.
Everyone obviously knows, and I'm someone obviously knows, is like so quirky in their own way, dude. No one's like a streamlined dude.
No.
Everyone, I think all of Obviously's friends, including me, are the type where like you could have a toilet and then you'll purposely go just do it on a tree because it's more fun.
I will use my fair share of toilets, but I've definitely.
I don't even know him, but I feel like you're the same way. Because we're all friends with him. That's why. That's how.
Yeah.
I'm not even blaming him. I'm saying like attracts like.
Mm-hmm. Yeah, the summer camp we went to, one of the things that happened there was, we didn't get along with the authorities at the camp because, of course, not. I heard there was a flood coming.
I'll give me 1 sec, but guys, just to let you know, the sound, like it'll come through. So like I know it's annoying not to be able to talk.
Of the grass, and we managed to turn a small section where one of the rabbis kept their golf cart, pulled up a bunch of the grass so that and selectively blocked some of the channels of water so that that particular section would fill up with water. And yeah, sure enough, when the rabbi went to go grab his golf cart, he slipped on the sections where we pulled up the grass and got himself covered in mud.
Damn. That's funny.
We had fun.
That's great, dude. I wish I thought of that. The truth is, I liked most of my rabbis growing up. I had good rabbis. I'm lucky. A lot of people didn't.
I got expelled from 4 yeshivas.
Really? Interesting.
Oh, yeah.
Well, obviously, you got expelled from 12, so it's.
Yeah, he beats me on that. He beats everybody on that.
Yeah, for sure.
Is it actually 12?
Like
9.
So I just threw a number out, and it was actually close to the number I threw out. I had a feeling it was. You can count it on two hands.
Oh yeah.
Okay, so what do you primarily look for when buying real estate? What are your primary investments?
My stuff is mostly the stuff that other people won't touch. I'm currently living in one that had 10 years of code violations, a dossier massive that's just with codes, violations of various kinds that I'm like working my way through and working with the county to solve and fix and deal with. But like my first true multifamily, my first more than 4 unit, was in Daytona Beach. It was a 9-unit block from the beach. And I got that because a person I know who does Airbnbs. She's like really good at Airbnb. She's really good at like the design and making places nice and Airbnb-ing them and making them like hotels, like boutique hotels. She was going to do that with this property. It's a 9-unit, a block from the beach in Daytona, in on International Speedway Boulevard, half a block from A1A, and she gets under contract on it and does an inspection, and the inspector goes and looks through it, and she gets contractor bids, and they quoted her like $160,000. And there was a bunch of stuff that even they didn't find. But she was like, "This is not my wheelhouse. Let me find somebody whose wheelhouse it is." And she, knew me, and she was like, "You've done stuff in North Florida," because I did my PhD at the University of Florida in Gainesville, which is less than 2 hours. At my speed of driving, I have done it in just under an hour, but it's 100 miles from Gainesville. Officially 2 hours from Gainesville, and 4 hours from here. So she reached out to me. She's like, "This, can I wholesale this to you?" And I'm like, "Sure." So she got like 10 grand, and I bought it. I wound up finding and fixing 27 plumbing leaks in that building. I renovated all the apartments. I worked on it. I had my tenants live. I had people living there while I was working on it. And I tried my best not to displace anybody, and I didn't. But it turned out that the building was really too far gone. Even okay, if it had been legal to properly renovate that building, that building would have been properly gutted and renovated. The problem is that was a 9-unit apartment building that was originally built in 1920 as a single-family house and chopped into 9 apartments. The chopping was legal.
How big of a house is this? This must be a big house.
It was a big house with 2 porches that they
It's
built
kind of a
the porch.
colonial old style. It's
Colonial old style 2-story house.
Wait, this is the same Airbnb that obviously sniffed glue in one of the units?
I don't think you ever went to Daytona with me. No.
But that was the
never
glue
went to Daytona.
sniffing story, right?
That must have been somewhere else. Obviously, have you ever done plumbing? Have you ever done your own PVC plumbing?
I haven't. The glue sniffing's a joke, guys. I'm joking.
If you've ever had to do work with PVC pipe, the purple primer that they use, if you're working in an enclosed space, you absolutely will get high on it.
Ooh, exciting.
Or you will feel lightheaded. Whether I should call it high, I kind of call it high. Yeah.
Right.
Yeah. No, being high on purple stuff, that's absolutely a thing.
Right.
And that's by accident. That's not deliberately getting high on it. Knowing obviously I wouldn't put it past him to get deliberately
He's like, why am I getting this smoke? He's like, I came here with good intentions. I put a podcast together. Everybody's ripping me.
This was a 2-story house that had a porch, and then they enclosed the porch, and had another porch, and they enclosed that porch. And so you have porch on one side, porch on the other side, and then they chopped it basically they chopped the downstairs into 4 units and chopped the upstairs into 5 units. And that was like 50 years ago, 60, 80, 70 years ago. This was a crack house in the 1980s. There's kind of a theme in the places that I own. I tend to own a lot of former crack houses. And I tend to turn crack houses like places that nobody self-respecting would ever live in.
Right.
And I will live in them in that transition, and I turn them into places where, people will inhabit.
But my question also is the neighborhood itself, meaning how are you making sense of the profit? Are there say you buy a house in, I don't know, bumblefuck nowhere, Cracktown for, I don't know, 100K. Right? You put 40K into it. Is there a solid market? It's still a very low cost flip. Or do you see development going on right around the neighborhood, or you just buy it in a totally crap?
I'm not a flipper. I'm a long-term landlord.
Okay, so you want to own it. Okay. You want to hold on to it and rent it.
Yeah, because the problem with one of the problems that flipping runs into is because it's such a high-risk business, the interest rates are insane. The terms are insane. You're paying hard money rates. They don't make sense. They didn't make sense
12%.
when money was easy. They really don't make sense now. They didn't make. They make sense for some people, but it's a high risk business. The number of flippers who are having to eat losses on certain things, especially now. As the market turns. Look, a rising tide lifts all boats and makes a lot of people look like geniuses. But that's part of what fed the expansion in the number of realtors. What is it? Like two realtors for every active listing?
It's crazy. No, but now, so that's another thing we can get into.
Now it's even more so. Now
that's
it's like 4 realtors.
That's
for
such a
every
good
listing.
conversation I like having, because when we were in the COVID market, everyone and their mother was a realtor.
Everybody became a realtor.
And people were doing pretty well. I had a nice amount of deals myself.
Yeah.
And then everything shifted. It went from a heavy seller's market to a heavier buyer's market. And everyone's dropping. All these realtors are dropping because they realize, wait a minute, as soon as I put a listing on market, it takes months to sell. Not always, but now it's
put in the work.
Now you actually have to sell the property.
You have to sell the property
Beforehand.
You sell itself.
Exactly, and it's people that came into the business during that time. Me being one of them, I knew though I had enough intelligence. I just had enough of an understanding that it just doesn't work that way. There are up and downward markets. Things don't just stay the same, and you have to be aware of that.
And if anybody with a decent understanding of what interest rates mean,
Right.
The Fed doesn't have a great understanding of what interest rates mean. They didn't seem to comprehend that when you raise interest rates, you cause the mark-to-market value, the mark-to-market price of a bond, including a treasury bond, to decrease, which is what caused the bankruptcies of several major banks, all of which were being audited by my friends, by a company that one of my best friends is an internal auditor at, KPMG, the auditor of Silicon Valley Bank, First Republic Bank, and Signature, or so she told me. I need to actually verify that before I start.
Are they all bankrupt now?
Well, they all got, they went under and got purchased at heavy discount by all their equity holders took losses.
Wow.
Or some, however you call them failed, they're failed. They had to, the FDIC had to get involved. What the technical definition of a failed bank is, I don't pretend to know, but I think most people would call First Republic Bank, Signature Bank, and Silicon Valley Bank as having failed.
That's wild. By the way, I have a deal you might like. Speaking of deals, I'll let you know about it afterward.
Okay.
Now, what do you think? And we'll kind of stick to this briefly. What do you think is going to happen in the next year or two with the economy? Where do you think we're headed?
So we are at a few inflection points. So one of the things to watch is like how you have inflation and you have interest rates, and it depends on what you mean by like what part of the economy. So, like right now, in the immediate future, you're looking at an environment where interest rates have risen, and you're seeing a delayed blowback to that, a delayed set of results to it, because we came from such an overheated market in terms of unemployment, that the reason the housing market hasn't fallen is because people are in 30-year fixed-rate mortgages, which is a uniquely American phenomenon. In the UK, people were on adjustable rate mortgages, which is part of why, well, Brexit being a bigger issue there, but but like people's mortgages rose, and more of them are rising because they were on adjustable rate mortgages. American single-family houses are fixed for 30 years, and so long as people stay in their houses,
they keep the rate. Yeah,
they keep their rate, they keep their mortgage payment. So long as they keep their job, with low unemployment, if everybody keeps their jobs, yeah, people are just going to hold on to their houses because they're not going to be able to get the prices they had been able to get, and that's why, you know, what suffered was transaction volume, and so, you know, because it's not worth a buyer buying. You know, you look at the kind of deals that made sense in California. You know, in California, you'll see in NorCal or SoCal, either in the Bay Area or in the LA area, you'll see a $900,000 house that rents for about $3,000 a month. Now, you think about what a mortgage payment on that at 3% looks like. You know,
what do you think that would run you? What do you think that would cost?
A $900,000 house at a 3% rate. You're talking about, so a $900,000 house at a 6% rate would be $4,500 a month in principal, in interest alone. At a 3% rate, you're talking half of that, so $2,250 a month. You're talking about an overall mortgage payment of about $3,000 a month on
and
a
then
3% rate.
And then with taxes and insurance, maintenance, you're not really.
Like after taxes and insurance. After taxes and insurance, so like principal alone on a $900,000 mortgage at 3%, principal alone is $2,250 a month. Principal, interest, when you add in principal, when you add in taxes and insurance, you're just over $3,000 a month. Those deals, if you assume that, you know, so people in California real estate would say, yeah, you're doing it for the appreciation, which is to say you're being speculative. You're assuming that it's going to go up, so you don't care if it, you know, barely breaks even or even turns a small loss month over month, breaks even if it's rented every single month and you don't have any maintenance.
Mm-hmm.
Turns a small loss if you account for vacancy and maintenance.
But at what point is it worth it? Because you may be taking that loss for a few years.
You might be taking that loss
and
for
it's
a few
still
years.
And it's still speculative.
It's still speculative, but if California real estate prices continue to go the way they had been from 1970 until last year, then you still make money, like your parents and grandparents, like the last guy and the guy before him and the guy before him and the guy before him.
It's true.
But when rates rise at at a 6% rate, instead of that mortgage being $2,250 in interest, it becomes $4,500 in interest. At an 8% rate,
that's a very different
You're talking
story.
about a $6,000 a month.
That's a loss. That's a monthly loss.
That's a monthly large loss.
That's
that
a very
doesn't
large.
pencil out.
Correct. Yeah.
And so places so California and other places like it, you're thinking your Class A properties, thinking your Miami, thinking your New York City, your Class A, your condos, and here you have the addition of the issues that all the condo boards that so many condo boards have been facing after the Surfside disaster,
right.
when it became very clear that a lot of these condo associations, these HOAs, are being run by HOA management companies that don't do not just a good job, but do an actively bad job often of keeping reserves.
Oh my God, forget about it.
You're seeing people having to pony up, and you're seeing, condos go on sale in advance of what they think are going to be, assessments. And you're seeing a lack of buyer beware on some of these, and you're seeing some buyers getting screwed by it. But, we're starting, those people who have stable jobs and are keeping their jobs can afford some of this, because at the end of the day, if you live in Silicon Valley and your monthly payment is $3,000 on a month on your, or $3,500 a month on your $900,000 house, if you stay put and keep working month after month, year after year for years on end, you will eventually pay off that house, and it won't really affect you. But if the unemployment rate rises, you see people losing their jobs, and then some months after that, starting to see foreclosures happen. Well, is it going to make a sense for a buyer to buy that house at $900,000?
Definitely not.
Absolutely not. You have to think about what makes sense at what interest rate.
Mm-hmm.
And in California, people will assume there's going to be some rebound, so it's still going to be elevated over what I would ever want to pay. But there are people who, will refuse to live in a house in Little Haiti while working on it, to buy a $140,000 house in Miami and make it make sense for them.
Right.
I very much want to live. I'm going to live in this house. I like my house in Little Haiti. But yeah, anyway, Going back to what I was talking about with California, if unemployment rises, you'll start to see foreclosures. And that's when you'll start to see prices have some issues. But but contrasting against that, you have inflation, and therefore wage rises, because I would expect that at some point there will be a rise in minimum wage. Wages have been rising, and as wages have risen, it allows room for rents to rise, and rents have risen. That's another part of inflation.
Considerably.
Yeah. So you have inflation, you have interest rate and rent. Remember that as an investment, a price is a function of interest rate and rent. Because at the end of the day, the price you're willing to pay, you have to look for what your cash on cash return is, and what your, month over month, well, not just cash on cash, but ratio of price to rent. Grant Cardone was famous for the 10x rule, or the 1% rule, which is the 12x rule. Whichever one you go by, depending on how speculative you are. Grant Cardone made it so big because in an era where rates are that low, 10x makes sense. You don't have to wait for it to be 12x. But anyway, so I talk about when unemployment rises. Well, when interest rates rise, suddenly a lot of these companies get squeezed. Because guess what? All those stock prices went way, way up during COVID. And stock prices went up. Well, to sum up, I think that we are in a nominal stagnation, like the economy in terms of number of dollars. I don't expect us to have a vast recession, but I expect us to stay about steady. But that's because of inflation. That's because rent rises and wage increases and price increases on the other things get counteracted by the forces that I mentioned. And so we'll have a real recession, but a nominal, small growth or about the same.
Okay. Yeah, and we also have
volatility.
Right, that makes sense. And we're still in a city that has a lot of growth, so
Yes.
I think it'll take longer for it to hit us. It has already, but
Yes.
we're in a good place for sure.
It may never hit us in nominal terms. It has already hit us in real terms, but it might not ever in nominal.
Okay, well, I guess we'll find out, right?
We'll find out.
Alrighty. Well, Baruch, thank you for coming. Much
Yeah.
much appreciated. Again, thank you to Avzi for making it happen. Make sure to subscribe, like, share, leave your comments. Again, follow me at Rafi the Realtor for any of your real estate needs. And until next time, peace.